Welcome to the latest episode of Flip the Cap, the insurance industry's premier podcast. On today's episode of Flip the Cap, I am joined by Jeff Sandy, Vice President of Workers' Compensation at Jencap, who I've also had the pleasure of getting to work with the last couple of years. Of the 32 years that Jeff has been an insurance professional, he's dedicated over 28 of those years exclusively to the workers' comp line of business. So to say that he is a true specialist in what he does would be an understatement. He's held various management and production roles at Hartford, Marsh, FICO, and Westrope, but the role that led him to Jencap was him leading the work comp division at TAS, who was acquired by Risk Innovations, who was acquired by Jencap, which led us here today. And as they say, the rest is history. So we have a lot of ground to cover with Jeff, so we're going to pop the top and get into it. So thank you so much for being here. We always like to kick off the show with a couple of getting to know you questions, who Jeff is outside of your professional world. And I'm fortunate enough to have known you for so many years, so I'm going to try to go easy on you, even though I know more about you than most.
Yeah, appreciate it.
We'll keep the conversation PG. So let's start with just a simple, what's something that people would be surprised to know about you?
From a small town in Michigan, I graduated with 32 people in my high school class and attended a college that had 1,500 people. I like small towns, and I hold that true to today. I live on 5 acres in the middle of I call nowhere, and I love it that way, and that's something probably a lot of people don't realize about me.
Every time I see you, you're in a big city and you live on plains, so that is definitely
nice place to escape to. I went to the small college to play golf, and that's really what drew me there at the time, and ultimately got me into the insurance program there. But that's the main reason I went that route.
Something else that people may not know about you, because I do, is talk about where you spend half of your year. It's not at your house.
Yeah, that's the other piece. I live out of my fifth wheel trailer 6 months out of the year, Florida. So
you really do are fine with small spaces.
Yeah. It's a pleasant change, actually. So.
Nice. So if money were no factor, what would you spend your time doing?
I'm the king of tinkering, honestly. So building things and just fixing things. That's kind of what I do. I'd be a maintenance man probably somewhere. So
a really awesome handyman.
Well, no, I'm not awesome. I just like to tinker. So.
You like to build things, though.
Yeah, I do like to build things, birdhouses and different things that I'm toy with. So.
What's something that you have built or put together that you're most proud of? Like, man, I really pulled that off.
Going back a long way. So we have a pool at my house, and I built a couple of smaller outbuildings. I think that's probably my claim to fame. So.
And they're still standing?
They're still standing, yeah, knock on wood, yeah.
What do you think your superpower is that makes you so good at your job? Because you are damn good at your job.
I appreciate that. I guess if I had to depict a couple of things, creativity. I've been doing this a long time, so I've seen a lot of different types of accounts and different needs, and I think in just stepping back and being creative and involving our team to talk about ideas of, would this be good for a captive or a large deductible, or would it be a large deductible in a couple of years? And if we're going to do that, who do we team up with now to get to that end point? So I think it's probably the creativity. So much of what we do in the comp space anymore is just relationships, because the coverage piece is not at the top of the list. There's statutory coverages, and those are what they are. So it's really about building relationships both with our retailers and our carrier partners to get that creativity and get done what we need to get done for an insured.
Not just accommodating the current needs of the insured, but anticipating.
Yeah, there's nothing better than committing and trying to get a long-term commitment from somebody to hang in there with us to reduce their mod or get them to a coverage plan that they can afford and live with.
You're a Gamma Iota Sigma graduate. You've served on their national board of advisors, and I know have also participated heavily in your local Kansas City chapter. So talk a little bit about the organization and why you're so committed to it.
Yeah, so Gamma Iota Sigma is the national insurance fraternity. Countrywide, there's a number of schools that have programs that are insurance driven, whether that's to be a claims adjuster or auditor or an underwriter or a broker. It's very focused on the insurance world only. So we struggle to get young people into the business. And so even back when I went to school now a lot of years ago, there was a Gamma Iota Sigma, and it was kind of in its infancy stage. But keeping and getting young people involved is imperative, and we all know that. So I think the more we can get involved and encourage people to come into the business and do the internships and get the exposure to the industry is just going to be beneficial for all of us in the long run.
Is Gamma Iota Sigma an organization for college students or also college graduates?
So it's a program for college students, but there are also alumni chapters. So in Kansas City, for instance, and in a lot of cities across the country, they've created alumni chapters, again, just for people to talk about how they can get younger people to come into Gamma Iota Sigma. So the local Gamma Iota Sigma chapters from Missouri State, in our case, will come in on occasion, and we'll entertain them and discuss opportunities with them and let them know what's going on. And there's a lot of young people popping up in places that have come through Gamma Iota Sigma, so they want to continue that on as well.
We're going to take a quick break, and when we come back, it's time for Jeff to flip the cap. All of our guests play for bragging rights only, and the score to beat is 2 tosses into the cup. So we'll see if Jeff can shake up the top of the leaderboard. It's been 5 or 6 podcasts since anyone has broken the barrier of Dev Diaguardi at the top. So we'll be right back and see.
Flip the Cap is brought to you by Jencap. Jencap is one of the largest wholesale intermediaries in the United States, with expertise in wholesale brokerage, binding authority, and program management. Jencap has specialized divisions and affiliate companies that provide niche expertise, unparalleled market access, and nationwide influence. Encompassing expertise from every corner of the industry, Jencap is the ultimate award-winning insurance family. Put Jencap to work for you.
We're back, and you're watching Flip the Cap, the insurance industry's premier podcast where insurance insights flow and trending topics are always on tap. I'm joined by special guest Jeff Sandy, Vice President of Workers' Compensation at Jencap, and it's time for Jeff to flip the cap. When we were setting up, he sank like 5 in a row, but that doesn't count, unfortunately for you. After we play the game, we're going to sit down with Jeff and really dig into the world of workers' compensation, talking about some of the most misused class codes, alternative plans that are really trending in the marketplace, and a lot more. But without further ado, let's see how it goes, Jeff.
All right.
Time to flip the cap.
I'm ready.
See, so my Here.
What am I at?
Is there
3?
like a trick something in the cup?
Don't see it today.
There you go. I don't even know where that landed. 8, 7, or 8?
Yeah.
Okay.
Middle of the pack.
We're back, and we're going to dig into some really interesting topics as it relates to workers' compensation insurance. But before we do, let me just give you a shout out for the best shirt I've ever seen a Flip the Cap guest wear. And I kind of think we need to start a separate leaderboard for best Flip the Cap themed shirt.
I'm coming to Deb, so
you're
being festive.
You're in a league of your own in this hypothetical leaderboard that now needs to happen. That's well played. So let's just start at the top. Work comp is really one of the only lines of coverage where coverage isn't part of the conversation. It's a statutory coverage. So what really is part of the conversation when you're trying to place a risk is what carrier is the best fit with their services, their loss control, all of the above. So talk a little bit about that and how it plays into what you do on a daily basis.
Sure. I mean, workers' compensation in the wholesale space is becoming more normal, but 10 or 12, 15 years ago, it was quite unheard of to be in that space. Workers' compensation in the wholesale space is a little bit different. We're not an E&S play. We can't charge whatever we want to get a risk taken care of. Correct. So we have to play within the filings of a specific carrier in a specific state. So that becomes challenging sometimes to be able to get enough premium or even get low enough on some instances. So the value we add with the statutory coverages, there are other coverages outside of that, whether it's voluntary comp or alternate employer endorsement or blanket waivers of subrogation or individual waivers of subrogation. There's lots of little things that that need to be addressed for a specific insured depending on their contract requirements and what it is they do and who they do it for. We run into this a lot where the package carrier, for instance, wants to do the workers' comp because they're offering the auto. Well, that might not be the best fit for their insured. There's other carriers out there that offer more services that they may or may not need. Loss control is key in trying to, control that environment and make it as safe as possible. Develop that return to work program, all those kind of things that impact your experience modification ultimately, which is a big price driver in our world.
And you guys have access to a lot of carriers that are good at a specific thing. So they truly double down and specialize in healthcare risks, and their loss control is specifically tailored to those types of risks or the really, really high hazard risks.
Yeah, absolutely. If you've got hospitals is a good example. That's a little different animal in developing a loss control program. They can see the people internally. Do they have a plan in place, and are they, taking care of that? Is there telemedicine involved? Is there OSHA requirements that need to be addressed? All of those are important loss control issues, as well as the claim management side. Again, that's a big piece of it.
Another thing that is definitely unique in the workers' comp world, you're just a unicorn, what can I say, is your rates continue to decrease, which I guess a lot of other people in the insurance industry cannot say the same. Right. So talk about that general trend, why it's happening, how it's impacting retail agents.
Yeah, we're on multiple years of double-digit decreases in most states, and we have not found the bottom yet. The economy has a lot to do with it. The unemployment rate is nil, which helps, and as that goes up, it tends to cause more questionable claims and those kind of things as people get laid off and turnover there and different things. So the rate reductions apparently have been warranted because the companies are posting nice combined ratios in the line. It's difficult to explain, quite honestly, but there's got to be a bottom in sight, I would think, fairly soon, and maybe see some increase in some of those in some states.
There are several different alternative workers' compensation plans that are available for the end insured. And when you dig into some of those plans, they're really, really detailed and intricate. You can't fumble your way through it, and really requires a specialist to understand them, know when to use them, know how to use them properly. So what are some of those alternative plans that are available for insureds?
Yeah, just kind of a brief overview there. So typically, your workers' compensation policy guaranteed costs. So the insurance carrier is paying every first dollar of claim that you produce. The second piece to that, an alternative plan, would be a deductible. So maybe they take on a $10,000 per claim deductible where they're actually covering the cost of that, similar to your homeowners where you have or car insurance. Either way, you have a deductible that applies to each and every loss. As you go from there and insureds get larger and well maintained from a safety standpoint, they can get into larger deductibles. So as your premiums increase, the possibility of a $150,000 deductible or a $250,000 deductible become into play. There's a lot of financial risk involved there and a lot of financial commitment from the insured side with letters of credits and different things. So there gets to be a lot of moving parts to maintain and to know what you're getting yourself into. Along with large deductibles, there's retros, which quite honestly we haven't seen in our industry in a number of years. They hear the word popping up a little bit here and there. So maybe something on the horizon coming back around. Retros are loss-sensitive plans, so you're going to pay X, and if you perform well, you're going to get some money back, and if you don't perform so well, you're going to pay some additional premium. From there, you get into somebody that's going self-insured, truly self-insured, and you're just buying excess insurance over what the state requires you to pay. So you're paying each and every dollar up to a certain point, and then you're turning it over to an excess carrier. Other things within there are dividends. So we see dividends in a lot of states where, again, based on how you perform, you can earn money back. There's no upswing typically in something like that, just a return side. So that kind of the competitive tools that we're seeing out there with the softening of the space.
What class of business, in your opinion, is most misunderstood?
The staffing industry, and it's growing significantly. So a lot of agents, in this case, are being thrown into a staffing account coming to them, and understanding how that works is key, because I'll have people that approach me and say, well, I have a staffing guy and all he does is janitorial, for instance, and he's in these 20 operations, a sawmill and a manufacturer and different operations. And there's the misconception that they should be classified as janitorial, and they don't get that classification. If they're going into a premise of a sawmill, for instance, they take on, depending on how the sawmill is classified, typically it's sawmill NOC, not otherwise classified, which means those janitors, if you will, are falling under that main classification. And that's typically what I see misclassified the most in that staffing space.
Is there a big rise in staffing risks?
Yeah, COVID really created some of that, I mean, in my opinion, with people laying people off and sending them home, and then the production requirements, coming back into play. There's some hesitancy to hire another full staff again. They're outsourcing a lot of that, so we're seeing staffing explode, honestly, countrywide.
What are your capabilities within your team to accommodate staffing risks?
With the increase in staffing that we're seeing, we've added specialists and markets to take that on. We've just added a new market we're excited to roll out, and hired some new folks to specifically address the staffing. So we've got the people in place to help agents, navigate that a little bit different exposure.
Audits are a huge component of workers' compensation policy maintenance. So what are some key considerations that our retail agents need to be mindful of?
Kind of going back to classification, correct classification again is key, because there's nothing worse than an agent writing a new piece of business and earning that business, and then 15 months later trying to deliver an additional premium on it for double their premium that they initially went in with. Not a fun conversation. So again, the expertise that we can add is helping get that classification done correctly up front, but also on the backside, understanding, the NCCI rules are fairly clear, but they're also a lot of words. So, having a advocate in your corner to help do battle with an auditor in this case, that we see, auditors being put in the spotlight to make sure that they're collecting the right amount of money on specific insureds, especially with the rates being depressed the way they are. This has popped up a little bit here in the last few months of auditors really pushing to get that additional premium where they're warranted. So having somebody like us in your corner to help do those battles with, again, carriers that we have relationships with and or volume can help in making that process a lot easier. It doesn't help that carriers are looking for premium, so the auditors are really digging into the books of insureds and making sure that the classifications are correct and accurate, and that they're collecting the premium dollars that they should be collecting. And
with all these rate decreases, they have to find money somewhere.
They're
unfortunate.
Yeah, we see them focusing heavily on it, so it's going to continue to be an issue.
The workers' compensation division at Jencap certainly makes my job easy as a marketer, because you really do stand out in the industry in your reputation for having just endless markets at your disposal to accommodate a risk, just unprecedented and long-standing relationships with your carrier partners, with your retail partners, and you just are in a league of your own when it comes to your expertise. So from your perspective, what is the Jencap advantage when it comes to our workers' compensation division?
Yeah, we're fortunate to have an awesome team. We're true specialists. That's all we do every day is work comp. A list of markets, 70 plus markets to handle whatever it is, wherever it is. Our Rolodexes are deep. We've got relationships, underwriters that have been around for 20 plus years as well. So we know them, they know us. Deals get done that way. You got to have somebody trust you and listen to your story on some of these accounts that are a little bit tougher. The ability to do different exposures as well, the USL&H, transportation, construction, healthcare, again, staffing, which we've hit on a little bit. We've also developed a programs division to do anything from alternative type programs to captives to even being involved in PEOs where necessary. We spend a lot of time structuring our department as well to take care of our agents' needs. So we've created both a small business division and a large accounts division. They're two separate animals, honestly. So the small business side, we can turn and burn quickly, and we know what markets to go to. The large accounts obviously take a little bit more brokerage involved in some discussions and a plan, longer term plan potentially to get those accounts on the books and keep them there. We've invested a lot in technology on both those segments as well to help move that business, created a portal for our agents to access their documents and including loss runs. There's no risk really that we're afraid of. We've seen it all, and we love the challenge.
We can just make you a t-shirt. We aren't scared.
Right.
Bring it on. Well, unfortunately, we're out of time. I really appreciate you joining me, Jeff. I'm your host, Kathryn Smith, and you're tuning in to Flip the Cap, the insurance industry's premier podcast where insurance insights flow and trending topics are always on tap. Until next time, cheers.